Hello and welcome to this week's weekly market update. My name is Alejandro Zambrano and I am the Chief Market Strategist here at Thinkmarkets. It's going to be an action-packed week. We have the non-farm payrolls coming in. We have the earnings from companies like Meta, AMD, Google, Uber. Plus, we have the US election coming up next week. And there's probably going to be some positioning this week to see what's going to happen next week. So it's going to be a very interesting one. And we're going to begin with looking at the risk disclaimer. So before we start, I want to stress that trading financial markets unfortunately is high risk and we may lose all of our invested money. So what's actually driving the dollar higher here? Well, this is a chart you don't normally see, but it's the US yield on the 10-year government bond. So what's happening here is that we're actually seeing yields pushing up strongly. So the US government bond yield was at 3.6% just in September, and then we pushed strong upwards, and we're now at 4.24. And what's interesting here is that if you think about it, when the interest rate is high in one country, the money goes to that country. Because in other places, if you look at China, if you look at Canada, they're all cutting rates. Now, they were cutting rates in the US as well. But what's interesting, if you look at this little table here, is that just a couple of, well, 1 month ago to be exact, people thought that the interest rate was about to be here around by the end of the year be around these two levels, so between 375 to 400 bps with a 22% likelihood. Now that has changed. Now people now rather think that we're gonna cut only 2 times before the end of the year, whereas before they thought they were gonna cut 1, 2, 3, 4 times. So people are not as dovish or bearish on the US economy, okay? And that is something that is pushing the yields up, that's boosting the dollar, and it's also turning stock market indices wobbly, okay? And it's up because, one, people think that Trump might win. And if Trump would win, then that would mean that probably he's going to boost economic activity by cutting taxes. That's going to make the US economy grow faster. When the economy grows faster, you have more inflation, and that forces interest rates to be high. The other bit as well is that he's anticipated to spend more money, and because he's not really telling us how they're going to pay for these tax cuts, okay? They're not telling us that. And that means that there's higher risk to hold US government bonds, and that is also pushing things to the upside. So there's a two sides to it here, but both are pushing the yields higher. As well, we had the Fed Beige Book. The Fed Beige Book is a book that is a report really that gives us a bit more details of what's happening in the economy, and it's telling us that things are actually doing good. We're having a soft landing. There's no reason to anticipate like a major recession. As well, the PMIs for September were really good, and that is boosting things to the upside. So there's a few things happening there that is pushing this. Another thing as well is that the ECB, remember those guys? They have been telling us that the might be ready to cut with 50 basis points. I mean, that's exactly what the US central bank did not so long time ago, okay? But they are now opening up to maybe cut with 50 basis points. That is also weighing on the euro. Canada cut rates, China cut rates, so things are going in the other direction now. And this is very typical, guys. Like people, it goes from being very negative on one currency to them being quite bullish. So at one point, it wouldn't surprise me if things go the other way around. So I would be actually I would actually be anticipating this to go up a bit more. What else happened last week? Well, we have gold pushing to a new all-time high, and we'll discuss Bitcoin as well in a few minutes. So how important are these yields? Well, very important. If you look here, the dollar index is this purple line, okay? And the US government bond yield is the blue line. So right now you're trading the same thing to some extent. Now we don't know, sometimes it's the dollar that moves the yields, and sometimes it's the yields that move the dollar. So it's a relationship there. But what is interesting is that this relationship is really tight right now, and this is actually causing the dollar to push to the upside. So with this in mind, and then if we would look at something like this from a purely technical perspective, it does suggest that maybe we can see slightly more dollar strength. Now let's take a look at what happened this week. So there's a lots of things happening this week, and what's interesting here is that there's a lot of stuff. Like if you're interested in Nvidia and AI, that rally, you do want to check out AMD. So AMD, as you know, they produce processors for our computers the same way as Intel does. They are trying to catch up with Nvidia, so there might be something here for you if you're interested to invest in that sector. They have earnings report on Tuesday after the market closes. Alphabet with Google, I'm sure most of you guys have a Gmail or use like YouTube and Google search. They have earnings on Tuesday as well. In terms of trading for the traditional markets, I would say ADP numbers. So that's US ADP. That gives us a bit of a hint of what may be happening with the labor market. And people think that the numbers will drop from 143K to 110K. So that's something you want to check out. That's going to impact gold, EURUSD, stock indices, everything really. We have GDP as well coming out, but that's less important. And then you have Coinbase. So some people, they don't want to touch crypto, okay? But they don't mind trading a crypto stock. And that's what Coinbase is. Coinbase is the biggest, probably the biggest exchange in the US for cryptocurrencies. And that is a play into crypto as well. And then you have Meta with Facebook, as you know very well. On Thursday, if you're holding any dollar yen positions, you definitely want to keep an eye on those, because we have the Bank of Japan rates meeting on Thursday. There is no specific time when this is published, but people say about, I think it's 2:30 to 3:30 a.m. UTC. That's London time, so in the middle of the night. They don't think they're going to change rates, so there shouldn't be too much volatility, but there could be some volatility. The next rate increase is anticipated to happen in December. Now this is the big mover for the Euro Yen, Euro USD and Euro GBP, and possibly also the DAX 40. I'm talking about the Euro inflation figures. So why do they think they're going to cut rates with 50 basis points? Well, possibly because there is inflation that is below their target. So the ECB has an inflation target of 2%. And the latest reading, as it was updated, showed that inflation was at 1.7%. And this time around, economists think that inflation will increase and reach 1.19. If this doesn't get reached, for example, if we have inflation at 1.8 or even 1.7, expect the euro to come under massive pressure. Now, if you look at core inflation, it remains quite hot at 2.7%. Maybe that's one of the reasons why they don't want to cut rates as quickly. But they don't usually focus too much on core inflation. So headline is their target, really. And then another data point that's going to move definitely gold and indices is US core PCE figures. Core PCE is anticipated to pick up. And then as well, you have Uber and Apple releasing earnings. And then on Friday, you have the big number, which is the number from Payrolls, which is anticipated to show 140,000 new jobs created. Now, this is the EURUSD. Last week I said as long as trade below this level, we might go down. and we did indeed go lower. In fact, over the last couple of weeks we have been bearish here. We said we can go to these levels down here, which we have. Now we are at these levels. You might be tempted to go out and buy, but we need data supporting a push to the upside. For example, from Payrolls telling us that the US economy did not create 140,000 new jobs. In fact, there are some people that say that this number could be negative, so we can see job losses. Now, why would we see job losses? We would see job losses because of Hurricane Milton and Storm Helen. People think that that might deduct. In addition, Boeing, they're striking at Boeing, so that could cause a negative reading. So if we have a negative reading, it will probably be temporary in nature, but it might be enough to push the price above 108.76. As well, any indications that former President Trump is not going to win could also lift this to the upside. What else here? This is gold prices. So the trend remains bullish above 2,712. So it remains bullish between these two levels. And it technically remains bullish above these levels, and we can easily push to the upside. But to obtain a good risk to reward ratio, we would usually need some sort of correction, and that's why I'm highlighting 2,730, because we risk about $20, and then we can go up here, all right, and make $50. S&P is also bullish above 5,765, and last week we were actually bullish from higher levels here, but high interest rates are making this a bit wobbly, and that's why we had that drop. And you might ask yourself, why were we so close to price action? Well, because sometimes, like here, for example, with gold prices, we need to be close to the price action, because if we're not close to the price action, we don't get a good entry, and we get a bad risk to reward ratio. Now, even if we break below 2,700 here in gold prices, it doesn't mean that the market has peaked. It just means that it's going to go higher, but probably from lower levels. We would address at that point. And it's the same thing here. This little level, could have held, but it didn't. But that doesn't mean that the big picture trend has changed. And here's another one, Tesla. So Tesla had very good earnings last week. I didn't go too much into the details, but if you look at the actual market performance, it was very good. So trading close to 220 or so, and then push all the way up to 266, and this triggered a large ascending triangle pattern, possibly just a double top, but it's some sort of an ascending triangle. If you wanted to push it, you can call it an inverse head and shoulders with a head, left and a right shoulder, which gives you an even a more aggressive target. And I would say as long as trade about 240, which is sort of down here, I'm gonna go down, but then I think upwards. And then we're gonna finish with Bitcoin. So Bitcoin is coming back into fashion. The all-time high is sort of around 72-ish, but you have a big flag. Okay, if you go to TradingView and the Thinkmarkets account, you'll see that we published a trade idea for Bitcoin there, and we talked about the break to the 70-ish level. Now that flag on its own suggests higher prices, okay? But what's also interesting here is you have a double top. So a break to 69,623 could be really interesting for a push here. If you treat this like a double top, it suggests we can go to $82,430 per coin. So with that in mind, we're gonna wrap things up unless you guys have any questions. Let's check out the chat. If we don't have anything, you can just drop it below the video, and then we'll come back during the week. Okay, so we have no questions. All right, thanks so much for watching. I'm guessing you guys are watching the recording, and I hope you guys have a successful trading week. And we'll see you next time, same time here on Facebook. Thank you and goodbye.